Yeah. Well, I should be on right now, right? Everybody can hear me, I hope. Good afternoon, everyone. This is Karen at OptionVue. And it is a cold, snowy day out here in Chicago. I'm trying to stay warm even in my office as I look out the window on the very snowy, ice-covered pond. And that we're trying a new system here with it's kind of like a WebEx equivalent called Click Webinar. It's called Click Webinar, and so please excuse me if we have any problems because I am a little techno-adverse. I had, when one of my sons was little, as a blonde joke kind of thing, I actually took when the CDs first came out, I popped a CD in the CD player in the car, and then when it was done playing, I hit the eject button and turned the CD over and put it back in. And my son said, "Mom, you don't have to do that. That's a record that does that." I'm like, yeah, no kidding. And he goes, "You are not good." So anyway, I thought that was kind of funny. I'll always remember that one, and he still to this day thinks that I really was serious about popping it over and turning it over and putting it on the other side in the CD player. So anyway, we are looking at a couple of things today. I had a customer yesterday who wanted to know more about Lens VXX trading tools. I'm going to try and save that one, I think, till the end of the presentation. But I did list on the quotes display, which is the home base screen of OptionVue, I did list all these indicators that you can see here, the VXX, XIV, and then all these are indicators that Len and Steve from our company developed to show you crossover lines of when the VXX and XIV need to be bought or sold. And then I also, just for the heck of it, threw in the volatility index future, the different months, G, H, J, and K, for the different months that are trading right now. So if you're going to look at the VXX tools and follow what I'm going to tell you later, then these are the indicators you'll be getting and receiving data on. So we'll come back to that in just a minute or a few minutes. Okay, today I wanted to get more into looking at Google, and Google was up today $12.34, a change of 1.7%. And when you first come into OptionVue, for those of you who are new, you will see several screens. The first screen is called the quotes display screen. And this is where you can kind of gather all of your kind of picks, your picks, your main page, your stocks, your survey functions. You can actually have as many pages as you want. That's a new feature in OptionVue that wasn't there many years ago and until just recently. Also up here in the right, I see I've got a symbol count, and you can maintain your symbols and keep track of those by seeing what the number is up here in the corner. Also in the upper right corner, you can see this little dot going around our logo or the globe, and that indicates that you have real-time quotes coming in. Even though the market is just closing now, you still can see real-time data coming in, and if you wanted to actually see what data service you're part of, you would come in here and look at the continuous data source, which right now is saying quote view. We are trying to work on two other interfaces. We're having problems with them at this point. But for right now, our main data service is called quote view. I'm enabled for all of these exchanges, and I'm connected to NetView 1. So this is where you would set it up to either change a data service or look to see what exchanges you're enabled for. And if you wanted to suspend the data, all you do is double click and it says S for suspend, and then you could do some what ifing, and then if you want to connect to real time, you just double click again and it unsuspends. So I also wanted to show you when you come in the very first time into OptionVue and you want to see what assets OptionVue has for you to look at, you go to Edit, Look Up, and here is a directory of all the symbols that are in what we call the background database. That was the old name for it, or the daily files. The daily files is the new name for what's in the background of OptionVue. These are in alphabetical order, so I can scroll down and I can start picking out any number of these and hit Insert, and they will actually then display right here in the quotes display. I can actually even hold the Shift key down, and that would highlight a block of them all at once, and then I can hit Insert and the whole block will transfer over. Or I can just hit the Control key and scroll down and then pick these out kind of randomly or not randomly and hit the Insert key, and they will go over here in the quotes display page. So if I go all the way down to the very bottom, I see that we've got about 3,830 assets that trade options in the entire universe of everything that's traded in the United States. So that gives you some idea. Like I said, again, you can pick out what you want. If you know the symbol, you can type the symbol right in here, or if you know just the name, you can type the name in here and hit Insert. So there's several ways that you can actually add these symbols into the quotes display, or you don't even have to use Edit, Lookup. You could just go right down here anywhere in the file on the page and hit the Insert key on your keyboard. That opens up a new line or new area for you to type, and you could type IBM, for example. So if you already know the symbol, you just hit the Insert key, type the symbol, Microsoft, and hit Enter, and you've got that information. Once you decide what symbols you want to look at kind of on a daily basis, you can keep track of all the prices coming in, and then the very next thing you would do is open it up by double-clicking on the symbol. So I'm going to double-click on Google, and that's going to open the home base screen of this particular asset, which is called the matrix. If I don't want to double-click it, I can actually go to I could go to Window and then Open and then Matrix, for example. That's a lot of extra effort, though, so I don't like to do that. I just like to double-click on it. When I was sizing this before, I can maximize it, so that way you can see a bigger screen. And I have a large size monitor here, so that can take up a larger size of what I'm looking at. And I can see these different months that are trading. I can see a legend that clicks on and off. The legend is kind of a directory or a roadmap of what I'm looking at. And this, if I superimposed this legend right over this area, then the last transposes to 753.84. The change is up $12.34. I don't have a trade on. The high for the day, the low for the day, and so on. Same thing here with this legend. This legend here works for the options. So I've got the legend toggle on and off again. Just click it again to get rid of it. We'll overlay the words delta, market price, trade, and existing position. So you can format anything you want to show as a legend. The way I would format it is to go to the Format button, and I can see I don't really want all this information about the stock itself, so I'm going to just narrow that down to say 1/3. And then for cell size, I do like a 1/4 in this case, but I want to switch delta out, let's say, for market price. And these are in alphabetical order, so I can say market price. I could say theoretical value or theoretical price. And then the trade field is for my new prospective trades. The existing position field would be for actually existing positions that are already in progress. The summary can also be customized. I can look at that and have any number of pieces of information that are, again, in alphabetical order. By default, you've got cash flow, the current value, what the total gain or loss is, what the commissions are, then all the Greeks, and then the Greeks, the average implied volatility, the call implied volatility, the put implied volatility, and the put to call ratio. And then these are the requirements to open the position as far as cash flow is concerned. So I'm going to say OK after I made those couple of changes. And you can see that it's now market price, theoretical price, trade, and existing position. The other thing is the at the money option is denoted with a little caret here, or greater than sign. And I see that the at the money is the strike that's closest to the stock price itself. So that would make it 755. I can scroll up and down here so I can see more strikes as I scroll up and down. I want to make sure I see the at the money here as 755 for the puts going across, the calls March, April, and June. Now, again, I can scroll up and down. I can see more strikes if I scroll up and hit the down arrow here to scroll. Okay, so I can see as many strikes as I want to see. I can actually add more strikes and more months too. If I wanted to add the weeklies, for example, I could click over to define and then weeklies, and then I would actually see them if they were defined. If I want to start defining them, I could go to define auto strike and say, I had actually included these originally, include weeklies, then hit the apply button, and then say OK, and they should appear here. So I've got the weeklies interspersed with the other months. I really, in this case, don't want the weeklies, so I'm going to go back to define weeklies and hit cancel. Then you'll notice this is grayed out now, so that means I don't have any more months to view. When I go to the left arrow here, I can see that I do have more months. I still see some of these weeklies, and so I'm going to clear those out and then hit OK. So here we go. September, June, April, March, February. Now, if I don't want, let's just say I don't want to be going out as far as September, I can delete that month also by going to Define and then Options. And here's the September month. I can just delete it from here. If I want to re-add it, I can hit this little button here. It'll add July, October, January, and whatever months are the months that are in the cycle. Let's just see now. So if I've got February, March, April, and June, those look good. The other thing is that OptionVue comes with certain strikes defined, and I can either keep those predefined strikes or I can delete them. So the predefined strikes are set according to the strike range calls. This says in the money. Extent, I've got that range of calls set on small, the out of the money set on moderate. Same with the puts, small and moderate. Now I can either change these here. I've got 3 different settings. I can say a larger number of array of strikes than small, but I don't know exactly how many that would be. But I could say moderate, 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 moderate. I could hit apply and then say OK. And you'll notice my symbol count was around 600. Now it's 1,088. That's too many symbols for me. I don't like to see that many, and I don't like the weeklies like we were talking about. But let me go back now, and I'm going to say small and small and see what the strike range is now. And I don't really want those weeklies. So let's hit apply, and I can see a smaller number of strikes now. I'm going to also go to define options, and here I can see for sure what's being defined. So I've got the 660 all the way down to the 850s. And this has an X in it. That means we're getting that price, but this doesn't because I don't have puts. on those. And so I can customize this further. I really don't want the 660s. I don't want anything unless it's starting at 700. That's just my own kind of personal designation, or 705. And then I can go up to, say, the 850s. So I can just put an X in here, and that means that I'm actually designating those puts to pick up prices on those. So I can say OK, and now I should have my 705 should be my lowest, and my 850 should be my highest strike. So let's just double check on that. I can scroll down here, scroll here. 705 is my lowest call. 850 without the legend on is my highest. And let's check this out. This is 705 for the puts and 850 for the puts. Okay, and I've got my months again are March, April, and June, and September. Now, if I don't want the September, I can take those out, like we were talking about. All right, so now I've got 4 months, February, March, April, and June. I've got the strikes that I've designated. And you'll notice there's some colors here. When I hit the S, the colors go away because I've removed it. I hide the standard deviation shading, or I can invoke the standard deviation shading. And the standard deviation is based on the stock price, and it computes a 68% probability is a first standard deviation range of where the stock might be based on a high and low price of the day for the stock itself, going back up to 20 days. So OptionVue is actually computing a statistical, what we call a statistical volatility, which is computed again off the high and low price of Google for the day, going back up to 20 days. And it's putting those colored areas. That first standard deviation would be the closer to the money. So that would be our turquoise designation is a first standard deviation. And then when we get outside of that, let me go back here. I meant it differently. Where it's first standard deviation is the pink area. And then as we go away from the money into the second standard deviation range, which you see is 815, that turns it to another color, which is our second standard deviation range, which designates up to a 95% probability that the stock could be at this price. So I wanted to show you how we compute that 20.8%. And if I look at a volatility chart, I can actually see on a daily chart, this is a volatility chart as computed by OptionVue. The statistical volatility, again, computed by the stock high and low prices. I'm going to click at the ending date of it, and it's around 21.4. The implied volatility is 19.7, and that's the implied volatility is the blue line, and the statistical volatility is the brownish red line. So we can see a volatility chart here, and we can also see what percent this little 42 and 7 represent percentile rankings. Right now, the statistical volatility is in the 42 percentile ranking, so that means that it's not quite 50. It's kind of on its way up, it looks like. It's not at its highest peak. The implied volatility is at a very low percentile ranking. It's only at 7%, ranking being 0 to 100%. So volatility on Google is very low right now. Statistical slightly above it at 42, and its 42nd percentile ranking, with implied volatility being in its 7% ranking. That doesn't mean the percentages themselves. That's just a ranking basis. So getting back to volatility, statistical volatility 21.4 on this weekly. I'm sorry, on this daily, because we got daily, weekly, and monthly charts that I can invoke. So we're looking at around like I said, 21.4 on the statistical. So I can actually change that to 21.4, but before I do, I want to also look at the model, and then I want to look at the volatility, and I see that the statistical volatility, I've gotten 16 days accumulated of high and low prices on Google, and I can invoke that little button here and see what days I've gotten accumulated, and I've got starting the 24th, the 23rd, the 16th, 15th, 14th, all the way down 16 days back, the first day being December 27th. And the high and the low for Google for each day, exponentially weighted, gives me 21.4%. And this is based on however many times I'm opening up the quotes display and updating the prices on Google. And you'll notice I had a few days missing in that list. I think I didn't have all of the days around the 21st and 22nd, for example, would be Monday, Tuesday. I didn't pick up data for Google on those days. So it's only going to pick up based on when I'm in the quotes display and getting the prices on the stock. Okay. All right. So I've got 21.4 there and on the volatility chart. So I can actually change this volatility to 21.4 so that these shaded areas will reflect off of the statistical volatility of 21.4. And the reason I'm kind of going into detail on this right now is because I'm going to go show you the probability calculator, and that was kind of one of the main topics I wanted to discuss in the program today. After we open a matrix on any particular asset, we can look at a probability calculator to see what the probability is of the stock staying in certain price point areas. And the current price, I can click and get the current price updated. The closing price is $753.84. Remember, I just discussed how we got 21.4 statistical volatility. And now we can march ahead and put in any date that we want to project out to in time. Right now I can do March 16th. That's the one I wanted to concentrate on because that's 2 expirations from now. So if I type X2, that comes up with March 16th. If I were to type X2 minus 7, that comes up with March 9th. If I were to type X, which is just X1 plus 10, that would come up with March 26th. Oops, didn't mean to get out of there. Okay, so let's do X2 minus 7. That's March 9th. Okay, if I just type X1, that's February 16th. If I do X1 plus 8, that would be February 24th. So you can kind of gauge which day you want to move ahead to. Again, I want to look at March 16th because I'm going to have a bullish projection out in time to March 16th, which is the second expiration from now. And with the current price and the current statistical volatility, what is important to me are these numbers that fill in. This is based on a Monte Carlo projection for calculating statistical volatility. And the +1 designates my 68% probability range. The 68% probability range is a +1 -1 number. So it's saying that between now and March 16th, the stock, Google stock, could go down as low as 696 and as high as 816. Those prices are going to be within a 68% probability of occurrence by mathematical definition. I didn't make it up. But statistics classes teach first and second and third standard deviations. Luckily, Purdue, I did get a couple of math courses, so that's come in probably the most handy of anything I've ever had that relates directly to OptionVue's work that I do every day. My second standard deviation would then encompass a 642 to the low end and an 884 rounded off on the upper end. And by mathematic definition, that's a 95% probability that the stock will be in the range of 642 to 884 by March 16th, with the statistical volatility of the stock being at 21.4%. So I hope that makes some sense. Now, the third standard deviation is what we call the real outer wings. That's the 99.99999 repeating range of probabilities. And we're looking at Google going down as low as 593 and as high as 958. So that's a huge, broad range of, over 400, 350 plus points. Okay, but I'm normally trying to concentrate on where is the stock going to be by my projected date of exit as a range, just so I can kind of have a comfort zone that I can be in. Now, these two prices that I typed in are within this first standard deviation range. So as kind of a secondary way to use the probability calculator, I've got my first target set at 725, my second target set at 75. Now, just as out of curiosity, I want to know the results that are in these boxes when I type this information in. So, for example, I want to know what is the probability of finishing between 725 and 775. Well, by statistical calculation, it's 32.3%. What is the probability of ever touching 775? Because when I put on my spread, which I'm going to show you in a minute, I need to know if it's going to hit that higher strike, 775. And the probability of ever touching 75 is, guess what, 66.9%. That's a high probability of touching 775. So these are things that I need to know, that a trader would want to know when he's putting on anything, a spread, a straddle, a condor, a butterfly, or just even simply going long or short on a strike, on a call or put. So these numbers are very important, I think, to keep in mind and pay attention to, and I really like using the probability calculator. I think it gives you kind of more confidence to know if your projection for the stock is going to be accurate or not. I mean, if you're way out there and you're saying, oh yeah, I think this stock's going to go to 900 by March 16th, well, you're probably looking at a less than a 1% chance that it's going to go to 900 by March 16th, unless something totally unexpected happens, which it could. Obviously, we have black swan days, but I'm just saying that mathematically the chances are not very strong. So use the probability. Oh dear, hang on. Use the probability calculator and take it and put it to your advantage. And I hope I've covered this in a lot of detail, because this is a really important screen in the program, and I don't know that many people that use the probability calculator. Okay, so I'm going to look next at the price chart. And I've got the price chart set up on a daily basis. You can also do all kinds of indicators. You can do you can overlay moving averages, Bollinger Bands, acceleration bands, stochastics. I can invoke all kinds of things: stochastics, relative strength, MACD, momentum divergence. And I'll come back and look and hopefully look a little bit more at that maybe later. I don't know if we'll have time, but anyway, the indicators are here. And I can see on a daily basis, or I can see weekly or monthly. Let's go back to daily. I can see back to April of last year that we've been on a huge uptrend here. Took a little dip down back in November, back to 646, and now we're back up, almost 100. Well, yeah, it is almost 100 points back up since last fall. And I like to think that we're going to be building momentum because volatility is low. I think the price is going to jump a little higher, maybe back up to possibly up to the 770 range. So I would like a bullish projection on an idea, on a trade, and a bullish projection is what I'm hoping for. So let me invoke my trade and existing position fields. Let me go down here. Okay, and I'm going to show you February and March because I had put on 2 prospective trade ideas. And remember I talked about the importance of 775. I'm selling that strike. And this is I'm going to look at, first of all, the March. This is cash flow of $43.20 out of my pocket because the one that I'm selling is more money than the one that I'm buying. The one that I'm buying is a little bit more money. So I'm taking money out of my pocket to the tune of $43.20. My delta here is very important. So for every point that Google goes up, this trade on this 5 lot is going to be making $90. All my Greeks are mentioned here. So I want to see what this thing looks like in graphic form. So I'm going to go to analyze this particular trade first, and then next I'm going to, if I want a little bit more bang for the buck, I might look at this trade next. So first of all, we're going to go to analyze. This is a prospective trade, so I'm going to hit the little T button, although I don't have to hit that, but I can if I want to. And we're going to analyze this particular trade. I'm going to, let's see if that'll make larger. Okay. So I'm looking at that particular March trade, that debit spread that's bullish. And my little green wand down here, I can just pull this over and analyze at any price point. I can see, for example, at the 775 or higher, it's going to be making my full profit here. I want to also look at profit and loss. Okay. So now I can see I'm making a profit of about, well, anywhere from 1,700 on up. I can also look at more than one timeline. I can go down to 4 timelines, 3, 2, or just at expiration to make it less cluttered. I can see T plus 51 only at expiration. If I want to see how much money would I make or lose in between now and March expiration, I can set any time that I want. These are equal increments of time, but if I right click, I can actually put in different days and look at any projection in time out forward. So that's a nice feature. Just right click and then type in any different date that you want. Okay, so the main thing I'm trying to point out here is that if Google goes up at 775 or higher, I'm looking good on this. And where it crosses you can see where this trade actually, let me click on this particular T plus 51. Okay, so where does this trade cross 0? It looks like right here at 763.65. It's denoted right there for you. Okay, so now let's go back and look at the February trade rather. It's the same spread, and this time it's instead of taking 4,300 out of my pocket, it's taking 3,700 out of my pocket, not costing me quite as much. But here's the bigger thing. The difference is the delta is 138, whereas the delta here was only 90. So this has a bigger bang for the buck if the stock moves up. For every point it moves up, I'm making $138 on this 5-legged position instead of $90. So this looks good too, I think. But then, of course, I'm only going to hold it for 23 days instead of 51 days. So half of the holding period, about half again as much a delta, higher delta. So this might be actually a better trade. Let's analyze it by hitting Analyze. And we can invoke this wand again that shows the profit and loss, all the Greeks as we go across. and we can invoke different timelines. We can click on the different time horizons, 23 days, 12 days, or 0 days. I'm going to say 23 days out. Then I can actually view the previous case, which is the March calls, or I can view the February calls, or I can superimpose both. So let me just reduce the timelines. Number of lines down to, let's say, 1. And here I'm going 23 days, and here I'm going, let's see here. Here I'm going 23 days, and then the March one, I'm going out, of course, 51 days. So this, the March one makes less money overall than the February one, but the February one loses more money down here, whereas this is gradually losing money. Do you see that? Because this is the 0 line. So it's crossing the 0 line, and then it's losing gradually, whereas the February spread is losing money to a much quicker tune and much faster. It's a little bit riskier trade, obviously, but you've got more profit potential on the upside if Google does go ahead and spring out and forward quickly. So this is how you would use OptionVue in a real practical way to view your trades, to superimpose 1, 2, 3, 10, 20 different trades, as many as you want, using these superimpose features or the back and forward features. And I know that no other software that I've seen has this superimpose feature. So this is a very handy thing to have. And I wanted to show the probability calculator because I thought that was really important to see if you're realistic in terms of your own specific price projection and where you want the trade to move or not to move to, you know, by a certain date and time. Also, I wanted to point out again that you can highlight any month, and when you highlight that month, you're actually looking at all the trades. Like if you had 10 positions here, you would have all the trades that you could analyze at once in that column for that month. All right, so you can do that too, or I can actually even look at both. So if I hold my control key down, I can actually hit both months. And now look what we've got. We've got a convoluted trade, but it's all 4 positions, all 4 legs with 5 contracts in each one. And then I can just click off to get rid of that if I don't want to see that again. So once I've decided that I'm going to make the trade, I can hit this again and then hit the Convert Trades button and make this go into OptionVue's record keeper as an existing position. Before I do that, I wanted to show you one other thing in the info button, because I had a lot of people that didn't even know this, and we've had this platform connection with Options Express for like 8 or 10 years, and nobody seems to know about it. But if you come into the info button and you hit Configure Trade button, guess what? You can actually send your order directly to 2 brokerages. One is Options Express, and you would type your ID and password in for Options Express here, or you could choose Track Data and type your account ID, username, and password there. So these are very important. We worked with Options Express over 8 years ago, like I said, and got that developed, that platform. Automatic trading platform capability developed. And then about 2.5, 3 years ago, we did the same thing with Track Data. They're in New York, and they're a great brokerage to trade through also, just like Options Express. And then if you don't have either one of those, you would say none, but you could still have the trade button open. Let's say a website, say with Thinkorswim. Okay, you would just type www.whatever it is, thinkorswim.com or interactivebrokers.com here, and that's going to save you a step. So this is very important in the info button to set this up. And it's right here, Configure Trade button, because I'm going to show you then what to do next. So after you're done setting that up and you actually want to make a trade, into, first of all, into OptionVue's record keeper, you could hit the Convert Trades button here, and you could hit this and it would go into the actual T-log of OptionVue. Now, if you wanted to hit the trade button first and have it go out to Options Express, for example, if we had that set up, I have it set up for OptionVue.com. But if I had an account open with Interactive Brokers, I could actually go, or not with Options Express, sorry, I could actually hit that button, that trade button here, and it would actually take me into the Options Express or the Track Data platform. Then I would hit Convert Trades to make the same trade go into OptionVue's record keeper. So I have kind of two record keeping things going on. This is the backup one. I hit the Convert Trades, and guess what? They popped from trade into existing positions. So now all of them converted over into existing positions, and I can double check that they went in here by looking at the T-log and seeing that, yes, indeed, I did get all four of these legs, February and March, on as an existing position at this point. Okay, so that's kind of in a nutshell what I was going to show you today. I wanted to talk briefly about the VXX, give you a little background on the VXX real quick here, because at the beginning of my talk I showed you about these different symbols, and these symbols, if I type them in and I don't have the VXX trading tools purchased from our company for $499 a year, I can buy those, and then all of a sudden when I type these symbols in, the prices will show up. And Len and Steve, mostly Len, developed the VXX and XIV trading tools. These are exchange traded notes. They trade much like ETFs or stocks where you just buy and hold. This is kind of a different mentality than most people that trade options using our program are used to having. But the buy and hold mentality with VXX and XIV, XIV is the inverse of the VXX, and these are volatility ETNs, exchange traded notes. So they do follow the SPX and the VIX volatility indicator, VIX indexes, and they track these closely. But Len kind of took and asked Larry McMillan's permission to take some of Larry's basic methodologies and refine them, and he actually, in his video, which is on our website, and I can also send a link to it to you, in Len's video that's about 45 minutes long, he goes into all the details of the VXX and XIV and how you can take advantage of trading these long term. We at OptionVue are going to actually track these with you, and once a month minimum, we're actually sending you a commentary the first of each month about what the XIV and VXX has done. And then if these indicators cross during the month to where there's a sell signal if you bought or a buy signal if you sold, depending on if you're long or short these, we're going to actually give that commentary and that alert to you during the month as well. So we've been doing this since April. The results have been astronomical long term. When Len back tested these results, they were like into more than like, well, I better not say because I don't want to be wrong, but you have to listen to the video. They're just, in the 30 years that Len has been looking and doing trading and in the financial industry, he said he's never ever come across something that gives this kind of returns on a more consistent basis, that he was willing to put out there and tout, because he doesn't like to do things like that unless he's absolutely sure that he's on the right path. So we have these tools available for $499 a year, and they are really cool and they're great to follow, and I'm in it myself with my own money, real money. So I'm doing this as well, and then almost everybody in our company is too. The other thing I wanted to show you that relates to the volatility indicators would be these indicators here. You get these, they will be activated if you buy the tool set. So it's called the fair value line for the VXX and XIV, and down here the moving average of the VX differential. and we put 15 periods of 15 in here. So that's the way to set these up, in addition to the symbols that are on the quotes display page. And then you can track these anywhere on any chart, below any chart. I've got Google on the upper chart, and then I've got the VX differential 15-day period with the lens volatility indicator 15-day period overlaid. So I wanted to show this to you because I had a couple clients this week that bought the VXX tools, and they wanted to know what they had to, quote, do to get it set up and start following and tracking it. And then Len will, if you email me, I will send you Len's video and the e-newsletter that had all this information in it, and I can get that to you. So make sure you send that to Karen at OptionVue.com. Karen at OptionVue.com. I'll be happy to send that material to you. Okay, that's all I had, I think, for the moment. So I don't know how to see questions. Let's see. If Jeremy or Jim are there, can you help me find out where the questions are, if there's anybody that has any questions real quick here? Okay, I'm not getting any help, so I apologize, but okay, well, I think that's it for today. So thank you for your time, and I hope to hear from you soon via email. Okay, bye-bye.